Happy Friday, y'all. Welcome to another episode of the Friday Wrap-Up with Kevin Weedmark, aka the Mortgage Mouth. And I'm happy you're here. And what an absolute crazy week. I mean, you want to talk about a roller coaster ride. We haven't seen the market this volatile in a long ass time. And here's what really happened. It was all due to inflation and then the fear that the economy is slowing down, and it's slowing down quickly. So let me explain. Wednesday, CPI comes out, Consumer Price Index. It is way over forecast. Traders freak out, and we push the 10-year Treasury over 4.8. Boom, just like that. By Friday, we close below 4.5, and we continue since the inauguration, week over week. We are now still in a downward trend on that 10-year Treasury. I mean, wild. And really what happened is on Thursday, the producer price index number came out. It was hotter than anticipated. But once you peeled back the onion a little bit, it didn't look so bad to traders, right? Some corrections were made, we removed some things. It looked okay. So there was kind of this, okay, let's bring it back down. All the losses from Wednesday were recovered. And then today we saw retail sales fall off a cliff. They were anticipating a 0.3% increase and it was down 0.9 or something like that. The consumer, all of a sudden, yes, extremely optimistic with the new administration coming in, but they're really, I mean, look, we've been feeling the pinch of inflation now for years. If you look at it since the post-pandemic, groceries, your average groceries, right? Eggs are through the roof and everything right now. It is over 20% more you're paying just to feed your family or yourself. I mean, that's wild, man. That shit is going to eat you up regardless of who you are. On top of that, a lot of homeowners and people that are purchasing houses or landlords, insurance is going through the roof, and we're feeling that, right? We're having, as the consumer, to absorb all these costs. And unfortunately, it's going to take some time for energy independence to kick in, which I believe that's going to kind of be the thing that pushes inflation down for all of us. And I think overall, it's going to be a great thing. And I think the other thing with DOGE, removing some government waste. I mean, we're hearing about just some crazy waste in the federal government for years and years and years. So hopefully what that will result in, maybe not this year we'll feel it, but as a reduction in our federal income tax. Wouldn't that be nice? The talk of tariffs also, just to make a point, is kind of mute at this point. Yeah, they're out there, but I don't think anybody really fears them from an inflationary standpoint until they're implemented, until they flow through the system. Doesn't really seem to be a big concern. And the one thing I want to stress right now, the Fed is essentially useless. They are useless right now. They're irrelevant. They're going to be irrelevant for almost all of this year. Because unfortunately, there's not a damn thing that they can do to bring down the cost of our everyday groceries and services that we need. They can't do anything. As a matter of fact, I think they overstepped themselves towards the end of last year. I've talked about it before, and I just want to keep repeating it, that it's unfortunate that they got political with their third cut last year in December. Now we see inflation spike just like we did in 2024. It's almost like they don't learn ever. Never. So we got to deal with that, but they're irrelevant at this point. It's going to be more policy that we want to keep our eye on from the current administration. We want to focus on DOGE, whether you like it or not. Cost cutting, the government's got a spending problem, need to curb it. And lastly, if you're out there and you're shopping, a few things I would advise is, number one, I would use the bank's money for your closing costs. It looks like the economy is slowing, and what that means is that traders are going to move out of the stock market, right? Because where they're sitting today, they're going to lose money if they keep it in there. What they're going to do is they're going to move over, and that's kind of what we saw today, in the treasuries. They know a guaranteed rate of return. They're safe in a treasury market, in a bond, and therefore they're moving in that direction ever so slightly as we see clearer and clearer that the economy is for certain slowing down. And the other thing I would do is I would once again just focus on buy downs. If you can make an offer on a house, you can get some seller concessions. You may want to seriously consider those buy downs. All right, y'all, have a great week. You need anything from me, I'm always working regardless of where I am. A flyer, you need a pre-approval, you got a client that has a question, you have a question, right? Want to make sure that we're all on the same page as we're talking to our buyers, our sellers. We're doing an open house, we run into somebody at the grocery store or whatever. We want to make sure that we're all beating to the same drum with a great, solid message. So I hope this helps. Tune in once again on Monday. I'll be coming at you with the weekly update, and every day feel free to tune into the Daily Dose, where I give you a good 2-minute snippet of what happened in the marketplace. And lastly, if you could be so kind, make sure you subscribe to the YouTube channel, The Mortgage Mouth. That would be awesome. Right there you can get all the content, past content, whatever it is. I'm always game for somebody to come out or to take a look and call me out on maybe something I got wrong. All right, y'all, have a great weekend. Happy selling.